Good morning, it's Monday the 20th of September and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll give you a quick summary of the macro data points from around the world to expect over the week, and we'll then dig into more detail on some of the bigger stories straight afterwards. So, stay tuned. So, let's take a look at the economic numbers being issued this week. And starting today, we have the EU construction PMI figures and the German factory orders. On Tuesday, we'll be hearing the UK public sector net borrowing, and over in the US, building permits and the housing starts figures. On Wednesday, we'll be hearing the Eurozone consumer confidence figures, over in the US, the EIA crude oil inventories, and the US Federal Reserve interest rate decision, which is a big day in the calendar that we'll be talking more about in more detail shortly. On Thursday, we'll hear the Eurozone manufacturing and services PMIs. Here in the UK, the manufacturing and services PMIs as well, and the all-important monthly BOE interest rate decision, which we'll talk more about shortly. On Friday, we'll be hearing GfK's monthly consumer confidence barometer and the monthly German IFO Business Climate Index figures. So, for companies reporting this week, on Monday we'll be hearing from Finsbury Food. And on Tuesday it's the turn of Kingfisher, and we'll be talking more about that in a few moments. And the Compass Group, and over in the US, FedEx will also be giving us their trading update, and again we'll talk more about them shortly. On Wednesday, we'll hear from PZ Cussons and Saga. On Thursday, CVS Group, Fuller Smith & Turner, over in the US, Costco, and finally, Nike again in the US, who we'll be discussing more closely in a moment. So, in addition to the big federal elections in both Canada and Germany, and central bank decisions from the Federal Reserve and the Bank of England being the heavyweight factors this week, concerns surrounding the European energy crisis are set to grow. With supply from Russia limited and weakness in renewable energy sources combined with rising energy demand, Europe is now facing surging gas and electricity prices heading towards the winter. Expensive energy directly hits consumers' disposable income, whilst pushing inflation, which is already very high, even higher. Furthermore, manufacturers are likely to see margins and profits squeezed. This growing crisis is likely on sentiment. So, let's take a look at some of those key stories in more detail. So on Tuesday, we're going to be hearing from Kingfisher. Now, the B&Q and Screwfix owner has been one of the few companies to benefit from the pandemic lockdown last year and at the start of this year. Reflecting improved demand, Kingfisher has upped its guidance for both sales and profits twice. In the first half of this year, the firm reported an increase in like-for-like sales of 22%, and pre-tax profit is expected to come in around £600 to £645 million, and that's compared to £415 million a year ago. E-commerce now accounts for 18% of total sales, so this figure will be under the spotlight. The coming quarter is expected to see sales growth slow. Investors will also be watching for any comments over rising costs closely, and whether these will be passed on to the customer. The stocks trade 25% higher year to date. So also on Tuesday, we'll be hearing from FedEx. And after hitting a record high back in May, the FedEx share price has been steadily falling lower. The decline came despite posting record results in the last quarter, as demand for shipping goods gained traction and boosted by surging e-commerce sales across the pandemic. But the company has also been key in the US vaccination program, shipping doses across the country. In June, FedEx reported Q4 revenues of $22.6 billion, and that's up from previous two quarters and a 30% jump on the previous year. However, FedEx is operating in an increasingly challenging environment amidst rising costs and a tight labour market. The labour shortage is resulting in higher wages and decreased productivity, and it's likely to remain an issue until well into 2022. Margins will be a key focus, and revenues are expected at $21.9 billion, up from $19.32 billion the year before. On Wednesday, of course, we have the Federal Reserve meeting in the US. Now, after Fed Chair Powell failed to make an announcement regarding tapering bond purchases at the Jackson Hole Economic Forum in August, expectations grew that the September FOMC would be the key date. Then the August non-farm payroll report came in significantly weaker than forecast at just 235,000, which upset the apple cart somewhat. Inflation also grew at the slowest pace in 7 months, rising just 0.3% month on month, less than the 0.4% forecast. Annually, CPI rose by 5.3%, down from 5.4%, and core CPI rose by 4% year on year, down from 4.3%. So the Fed will start tapering bond purchases, but the timing remains in doubt. On the one hand, with uncertainty surrounding the outlook of the jobs market, the Delta COVID variant and supply chain issues, the Fed could well kick that can down the road to November. However, the hawks in the Fed haven't dialed back their rhetoric, and given that the ECB have reined in bond purchases, the Fed could comfortably follow suit. So keep an eye on the US dollar and, of course, the US indices. On Thursday, we'll be hearing the latest German PMI figures. Now, Germany's PMI figures for August eased lower, and there are signs that there could be more downside to come. However, the readings for both manufacturing and services still remain well above the 50 level, which separates expansion from contraction. German manufacturing is showing signs of resilience despite rising prices and supply chain bottlenecks. There are questions over whether that resilience can continue, though. German IFO business sentiment has fallen over recent months, hitting a 3-month low last month. These figures could fall again this month, particularly given the uncertainty surrounding the German elections coming up this Sunday. So, of course, keep an eye on the euro and the DAX. Also, on Thursday, the Bank of England will be holding their September meeting. Now, this meeting comes as inflation surges higher. CPI in August ramped up to 3.2%, the highest level in almost a decade, and well up from the 2% recorded in July. The central bank sees inflation reaching 4% by the end of the year, yet the BOE is not expected to hike interest rates from the historic lows of 0.1%. However, pressure will certainly be mounting on the BOE and could provoke a more hawkish bias than we've seen at previous meetings. BOE Governor Andrew Bailey revealed that the split in the committee is roughly 50-50 between those who are upbeat regarding the economic outlook in the UK and those, of course, who aren't. However, in this meeting we'll gain insight into what the two newest members of the committee think, with the new chief economist Hugh Phil and Catherine Mann replacing Geert-Jan Vlieger. Whilst no changes to rates are expected, a move to tapering bond purchases could be on the cards, or at least more members joining Michael Saunders in his dissent. So keep an eye on the pound and, of course, the FTSE. And finally, on Thursday, we'll be hearing from Nike over in the US, who are due to report their Q2 sales figures. And, of course, all eyes will be on China. Nike has a problem in China, and this isn't the first time that we've heard about concerns regarding sales in China, owing to the boycott following Nike's comments about not using forced labour from Uyghurs and due to COVID. However, thanks to outperformance in sales around the rest of the world, the company beat forecasts. And that, combined with an upbeat growth outlook to 2025, helped the stock surge 25% on June the 25th. However, this report is unlikely to follow the same trend. Concerns are now centred on manufacturing in Vietnam, which accounts for around 50% of footwear manufacturing and 30% of apparel. Growth is expected to slow. Sales in China are also expected to be weak, with growth expected around 10% compared to a year earlier. So finally, next Sunday, Germany goes to the polls. Now, these elections will be the first time that Germans vote without current Chancellor Angela Merkel running. Merkel is stepping down as the leader of Europe's largest economy after taking the reins back in 2005. Her departure leaves a void which is proving difficult to fill. A coalition government is the norm in Germany and is the most likely outcome. The polls are pointing to the centre-left SPD party having the edge, which would mean an SPD-led coalition is the most likely scenario. And this could be considered a slightly more bearish outcome for German stocks, given the party's lean towards policies including raising the minimum wage and supporting labour at the expense of capital. So as a result, keep an eye on the DAX and obviously the euro. So to wrap up, let's take a look at the dividends for this week. So in the FTSE 100, we'll hear from Smurfit Kappa Group and Hargreaves Lansdown. In the 250, Crest Nicholson Group, IG Group, Fidelity European Trust, Computer Centre and Redrow and Wix. So that's what's to look out for this coming week, and of course we hope it's a good one for you. Now don't forget to look out for our rundown every Friday morning where we take a look at what's happened in the markets over that week with our own thoughts and analysis. Also don't forget to check out our app, which you can download from your app store to your mobile phone, which gives you a whole host of useful functionality, including the latest financial news as well as monitoring your open positions. So until Friday, from all of us here at Atlantic Capital Markets, have yourself a great week.